All right, good morning, good morning. This is going to be the first time that I'm actually going to record this, and there might be some edits in here depending on how time goes. We're going to keep the Lyft chart up here for you so that you can follow along. I might be on my other computer, which is over here. So if you see my back, it's not that I'm ignoring you. I am just looking at other plays that I'm into, but I want to keep the whole Lyft thing moving and going and see where it winds up. You can see yesterday we bottomed out here, set a new all-time low at 1062. That's a 52-week low. That's our all-time low on Lyft, as I said yesterday. You can also see here where I have a downward channel that's formed. See this right here? This is with the red lines coming down. If you ever see one of those channels on my videos and it's green, obviously that's an uptrend. Red is bad, green is good. But if you learn how to trade, there is no good and bad. You just need to be in the right trend. All right, so anyway, we did get a bounce yesterday, and we got back over, let's see, we got all the way up to, looks like, right around 11 bucks, 10.97, something like that. So we're going to see how this plays out. Right now, I could pull a retracement here. But because the elections are still in the balance and we don't know which way things are going, and normally government doesn't affect stocks, but this does because the stock market really wants a divided government, meaning they want both Republicans and Democrats to have about an equal say in matters, because that means they're in gridlock. And when they're in gridlock, it means they're so busy fighting each other, they can't fight Wall Street. So, and that's just a fact. That's just the way it is. So we're going to see what happens here. We got about 9 minutes before the bell opens, and then we'll be back. All right, cool. Also, keep in mind, I mean, if you want to get into trading, you want to start learning, download the Webull app. The Webull app is pretty good, man. You can follow it on your phone or your desktop, laptop, desktop, whatever you use. If you use your phone and your tablet, it'll be the same app. I use the desktop. Obviously, I use the desktop. But when I'm in a pinch and if I hear something that's really, popping off or dumping, I can always open up my mobile app. The reason why I say Webull is because you pay little to no commission on your trades. And you'll hear a lot of things about pay to flow, but don't worry about that. You don't care about that. It's the idea. Like my TD account, this year I'm probably $400 in trade commissions I paid to them. To do the exact same thing I could do on Webull for, $10. So I want you to keep that in mind. Webull also, if you sign up down below, you can paper trade. Paper trading means you don't have to put any money in. You can learn to trade. And then when you're ready, throw $100 in the account. They give you a bunch of free stocks. I'm going to get a couple stocks too. But the idea is that, you get invested. You start to learn. Because if not, your employer, whoever that might be, whether you're working for somebody or an independent contractor, listen, that means you're working for somebody. So take control of your own stuff. All right, anyway, the market's open. Let's see what we got here. Tesla is coming down to my buy spots. So I'm keeping an eye on Tesla. Watching Nvidia. Those are my main things that I trade. Dollar's up. Futures are down. SPY is down. Lyft is trying to get up. Now you'll notice here I've got a red line, which is my sell point if the stock really goes south. This yellow line is my warning sign. And then way up here, I've got this green dotted line. That's my sell point. It's about a 10 to 1.5 ratio, so a 10 to 2 ratio. Means I'm willing to lose 2%, but I'm willing to make 10%. Let's put this on the 1 minute chart. Let's see what this is. Now remember, these gray areas here, these are supply and demand zones based on volume from over here, but it's from a much tighter time frame. So see if I do this, you'll start to see these move around, and then everything lines up. See how that lines up in there? That's the supply and demand zones that I use. Just trying to give you an idea of what I look at. We've broken out of the downtrend, obviously. See the big red downtrend here? We've broken out of that. See what my Tesla's doing. Got to keep an eye on Tesla. That's where I make my money all the time. Oh, here comes Lyft down to the downside. The problem is the market doesn't know what it wants to do. There's no good news. The good news would have been a red wave. There's no red wave. So that means if, and this is what it basically comes down to. If the Democrats do retain power in the House and the Senate, they're going to spend more money. And if they keep spending money, it's a bad thing. More inflation. People are snapping up Lyft. Remember, I said anything under $11 is a buy. It's an absolute buy. Hell, if you bought it at the morning, 1076, 1094, up about 20 cents a share right now. It's only up 6 cents from yesterday's close. But from the morning, because you see the pre-market, it came down. Obviously, you can see that. My buddy Eddie asked me how I always, how do I decide what option contracts? Well, I only play two stocks, Tesla and Nvidia. I wait for them to hit my area and then I jump in. All right, we're going to try to get 3 Tesla options. I'm in kind of high. I'm in at $2.80 a contract right now. All right, so I bought those 3 Tesla contracts. I paid $280 a piece for them. Currently, they're worth $310 a piece. We're up 8%. And I don't know if you can't see the Tesla. Here, I'll bring up a Tesla for you. There goes Lyft doing its thing. Let's add a Tesla in here to the bottom for you guys. So if you got in like when I got in, I'm in right around $10.70 a share on Lyft. 10 shares. $107. No big deal. But let's see what Tesla wants to do. What does Tesla want to do? I'm going to switch this back to the 2-minute chart. You get a better picture with your time frames. If you're looking at the 1-minute chart, it'll drive you nuts. If you're looking at a 2-minute or a 5-minute chart, and technically, when you're buying stocks, especially in such small quantities, you're not so much concerned with the 1-minute, 2-minute, 5-minute. Don't get caught in that trap. You want to be looking at like the 15-minute and 30-minute chart. See how much better that looks? Looks like, oh, big green candle. But if I break this back down to the 2-minute chart, you see how that chaos and it'll just confuse the hell out of you and get you anxious and emotional. Now, let me tell you something. Can't be emotional in trading at all. Cannot be emotional in trading at all. So we'll leave that on the 5-minute. Now, Tesla, because I don't plan to stay in it long, we are in the, what am I in? I'm in the $195 call options. I played these same options yesterday. I capped them for $560, I think it was. And we're going to see what we can get today out of it. Technically, right now, I'm up 52% on these contracts. Currently up $525. So I'm setting up to sell 2 of these contracts. Always take your profit. All right, currently now these contracts are up 92%. We're now plus 780. And look at Lyft. We look at Lyft over here. Lyft is doing its thing too. So that's awesome. That's a good thing. I'll figure out how to get all these computers hooked up so I can show you each screen as we go. All right, we're trying to sell 2 of these contracts out. which we just did. So we just sold 2 of those contracts. So far up $673 on the day. I bought those contracts at $2.80. Sold 2 of those contracts out at $4.95. So that's $215 return on my money. And still holding 1 contract. So I'm in at 1070. I'm up 30 cents, 32 cents a share on Lyft right now. Tesla's making a hell of a rebound because Elon's not selling anymore. Looking for Tesla to break 195. Tesla has broken $195. My calls are now in the money. You can paper trade this. You don't have to play it for real, but you can get used to trading this way. I think I'm going to bang out, take my money, call it a day, and that's it. We're done. $690 in 10 minutes. Now you see here, this is why if you're going to day trade, you really need to be paying attention. It hit this level up here at 195, right? And then it starts to retrace. Well, I'm already in and out. Remember, I got in down here on my contracts and got out up here. Sold 2 of them around 194, sold the other one when it broke 195. Took my profit. Instead of sitting in thinking that the stock might keep going up, always take your profits. And today my profits, I mean, hell, man, I got 2 contracts out at like 80% and the other one at 105%. If you can't be happy with that, I don't care if it would have kept running, but I just didn't want to be still in when it's dumping like this. As for Lyft, well, we can do a deep dive on Lyft real quick and let's see what's going on with it. So we're in one of my zones, my supply demand zones. Remember I showed you these? See, it's in this big, where you got a lot of volume here that's being traded. So we're looking for it to hold there. But here's something else if you don't know what a Fibonacci retracement is. So we take it from the low point of the leg, and we're just going to bring this out, try to find the high point of the leg, which was there. So when we look at it, Fibonacci retracements are usually going to be somewhere around the 50% retracement, which is here. We'll make that nice and big so you can see it. We'll make it white. That's a 50% retracement. That means if a stock moved 100% of the move, it has a good opportunity for it to retrace 50% all the way down to 78%. So theoretically, you could hold this, and if it bounces off this 78% and bounces back up, then you haven't lost any money per se. You might have less profit, but you haven't lost money yet. But if it breaks through that 78% and you're still holding on to it, then you might want to get out of it because it's pretty much showing you it's about to go the other way. And that's whether the stock is going up or coming down, depending on how you're playing the stock. That's how I look at it. So we can see we got our retracement going on. I can get rid of this channel because it's broken this channel here. Here, let's get that out of there for a minute. Because we have our 2 white lines. I should make this one yellow. And I'm sorry, that one should be blue. Blue is the 50%. Yellow is the 78%. I like using colors to warn me, right? We know red, blue, and green are red, green, and yellow. Stop, slow down, go, caution. See, now it's getting ready to break. It's broken through that blue. See what it does. But you also see it's hitting in the supply zone where there's volume. So there are buyers there. So we'll let Lyft ride out. I'm not in anything anymore over there. I've already made my money on the day, like I said. Plus $690 over there today. How much did I put at risk to make that $690? I was in at 280. So 280, that's 6. I risked 840. Is my math right? 2.8 times 3. So I put $840 at risk to make $690, obviously with my $840 back. So a $690 profit. That's pretty damn good. Let's see. Times 8 equals. So we're going to say we did 8.4 times 0.82. So I made 82% of my money today. How can you not be happy with that? How can you not be? I'm happy. All right, y'all. We'll see you later.